All right, good afternoon, everyone. Hope everyone is doing well. What a pretty volatile week throughout, with the VIX up on the week as well, and the indexes made majority of index from Nasdaq to the Dow and S&P 500 had the biggest 1 week decline since September, and a lot of that had to do with today's data points. And we'll go ahead and talk about what's up for next week and the quite a huge week coming up with a lot of volatility for sure, with the CPI coming out on Tuesday morning, and also FOMC rate decision on Wednesday, 11 a.m. Pacific time. So first, let me just go with the CME future. The pricing in at this point still 77% chance of a 50 basis points rate hike going into next Wednesday, and I do expect the Feds to do that. All right, and Powell have said it in his last conference that they do expect as soon as December to ease up on the rate hikes, but not so much of a pause. I don't think that's going to happen. I definitely think it's going to be 50 basis points. Now, a lot of turbulence today. Okay, so first off, the PPI came out this morning, and this is the U.S. Producer Price Index. Okay, and what caused the jump in the the fall in the pre-market was that it was 7.4% actual versus forecast of 7.2%. So it was a little higher than expected. But you can see that, just by looking at the numbers and the trend, we are headed in the right direction. However, it was just slightly above that, and the month over month inflation, or PPI, was a little bit higher as well. So that's why the markets did not like that especially in the pre-market. We did recover some ground today. However, towards the end of the day, the markets definitely pulled back, and so far there's weekly declines throughout the market. So that's what happened basically today. And so next week, here we go. Next Tuesday is going to be the big headline data. And this is where you can expect a lot more movement off the data. So it's forecasted, the next week's CPI is forecasted to be 7.3 year over year. And at the last CPI, we came in at 7.7, which was surprising to the market, right? So we had a big jump in the markets and the equities, and of course that all pulled back, and especially now that after Powell spoke at that conference, we've given back all the gains ever since this November 10th, ever since the Powell speech and the run up with the surprising inflation. Now I do think that I don't know about you guys, but certainly energy and gas, okay, which is a big part of CPI, and shelter, has gone down quite a bit in November. Okay, so I do expect that the CPI is going to be in line with the 7.3%. I don't think we're going to see anything crazy like 6% or anything like that. I just think it's going to be in line. It's going to come in. That yes, the inflation is coming down, but that'll also give the Feds, right, the reason to at least slow down on the rate hikes. So anytime the rate hikes are announced, it's going to be volatile, but it's going to, in 2023, I mentioned this before, going into next year, we're going to see a lot of earnings recession. I think that the S&P might just end up flat all year. I think that, inflation could be tamed, and the rate hikes could even pause. However, you have to take a look at all the lagging effect that the rate hikes, which is the fastest one in history, that it's going to affect corporate earnings going into next year. Okay, so growth is going to be somewhat limited going into 2023. So we'll see. But in any case, let's go ahead and jump into the charts there. So once again, 7.3 is the forecast for CPI. This is your S&P 500 SPX weekly chart, and you can see that this is following the exact trend that we've had since the start of this downtrend back in December. So it would run into the trend line here, run into the trend line here, and run into a trend line. Generally, your downward sloping daily moving average 200 is basically just getting rejected every single time. And this, my friend, is starting to a lot to look like the September 2008. If you remember, this is what it looks like. So here was the pullback and a really subsequent 50% off the spies since when this occurred back in the 2008 timeframe here. So we'll see what the Feds have to say and what the CPI looks like. I think it's going to be a big swing next week for the equity markets. But let's go ahead and go to the SPY daily chart here. So you can see on the weekly, once again, we're rejected here, rejected here, rejected here, rejected here, and we're falling under trend pretty much at this point. So this was a nice rising wedge that looked a lot like August, okay? June to August run up, and then here we go again. And we pulled back on Monday, and we're continuing to pull back here. But so far on the daily, the SPY is holding on to the 3450, but it's definitely rejected the EMA daily 20 or SMA 20, sorry, 9 and 15, right? Got rejected as well today. So we're right here back towards that 390, 393 level. I do think that on Monday, we're going to hold these levels. There's going to be possibly a move lower, all right, and it'll probably hit 390, all right. So that's the downside target for Monday, and I think that we just have to wait until what the rate decision is and also the CPI data on Tuesday, and that'll give us clear direction of where the market is going. Obviously, if the CPI comes in dramatically, with a surprise and it's hotter than expected, then I think that quickly you're going to see potentially gaps getting filled with the gaps getting filled right here at this range, 385 to 381. There is still a gap here that needs to get filled. So it might be one of those things where, hey, the chart is telling a story. All right. The market is running scared that CPI is going to be hotter than expected. And I think we'll see this gap fill. So I'll put a downside target right within this gap, about 385 for if we get a hotter than expected CPI. And of course, the 50 basis point decision is not going to come to anyone's surprise going into next Wednesday. However, we'll have to look at or judge Powell's tone, whether he's dovish or whether he's hawkish. All right. So once again here, if you look at this daily candlestick, this is your classic shooting star candlestick. All right. Higher volume today for sure as well. But you look at your CCI stochastic, we have actually reset on the and cycled down on the stochastic, and it's starting to curl a little bit. Okay, so downside target 385, but I think if we get a soft inflation reading under 7.2% or even closer to 7%, watch out, folks. That moving average 200 is going to get tested again at the 403 level. All right. So let's go ahead and move over to the Qs. All right. This is QQQ. Another shooting star candlestick, higher volume on the sell side today as well. So we do have a gap down here that still needs to get filled. If you remember, from 273 down to 268 level. I'm going to put a price target here, probably 274 if that CPI or lower if the CPI actually comes in hotter than expected. But if it is soft, I'm going to say a retest back over 290. Okay. So I'm going to put a target of 290 because generally the headline CPI, that's going to be the big mover in the pre-market. Now, going into Monday, expect the range to be pretty tight on Monday. We could see 280 once again. And you can see that throughout the last month or so, we've been consolidating at these levels, at the 279, 280 level. It is not I don't think we're going to get that massive of a dip on Monday, but I do think that 280 will hold once again, and the market will wait until Tuesday morning to see which direction. So once again, 275 and below would be the target if CPI is hotter than expected. 290 if it is soft inflation, if it's 50 basis points. Powell sounds dovish. I think we're going to see back to something closer to 290. Okay, so that would be your downside target for upside and downside target for the Qs. One more I'll cover here is Apple. Okay, Apple is trying to figure out a decision. Apple did a pretty much another round trip today. Okay, holding on to the 140 levels, but I mean it pumped up to 145 And we started buying puts this afternoon at that level where it just kind of ran into a wall at the 145 level. But that is your clear gravestone doji with higher volume. Okay. So if Apple decides to break 140 on Monday, you can see this gap fill, but I wouldn't expect it to go further than I'd say 138 because you still because the market will still look into CPI, and there could be potentially a little bit of run up during the day if Apple comes below the 140 level. All right, so that's it, folks. Crazy week all around the markets this week. We'll just have to see what the Feds have to say and what the CPI looks like going into next week. So I hope you guys have a great weekend and see you soon.